Hi there everyone, thanks so much for starting your day with us. This is The Market. I'm Ava Andabash, with me Ajay Sharma as well as Anisha Jain, and let's take stock then of how the markets wrapped up in trade yesterday. Well, you have to say that we did manage to break into the green quite convincingly. After 2 straight days of a down session, we seemed to break that losing streak and ended above the 21,450 mark to end close to the highest point of the trading day with a 1% gain. And you did have, the fact that a lot of heavyweights aided that rebound. So, for instance, an HDFC bank coming to the forefront, something like a Reliance Industries as well, though you did have the index back in a consolidation zone of about 21,500 to 21,800. Banks clearly continue to underperform, and we didn't have support coming in from the foreign institutional investors. 6 straight trading days, a sell figure of over 30,000 crore rupees, but nonetheless, Ajay, we did see the markets come off something like 300 points from the low point of the trading
Actually, it is about technicals. Yesterday, it was about technicals. If you see, markets actually ended at day's high, but there was a big sell figure from the FIs. So what exactly happened? What happened was that there was an element of short covering in yesterday's session, and that had to come as we moved for, very close, just 1% away from the 50-day moving average on the Nifty. And historically, if you look at the last 6 months Nifty chart, you would see that as we move closer to 21,300, between 200 and 300, there's a very strong support zone. And historically, we have, look at the last, say the last 2-3 months chart, you will see we have rebound. There's a very strong support there, and we rebound from 50-day moving average. And yesterday, exactly that happened. Banks too, in fact, banks, I would say, are bigger drag on the markets right now, thanks to HDFC and a few others. But yeah, Nifty actually came back in style. And, it's never on our radar so often, but yesterday, it's the metals which also did a lot of heavy lifting. It was seen coming. China did announce a cut as far as the CRR goes, and the top 5 stock, if you look at the top 5 or 10 stocks on the Nifty, you would find big moves coming in from Hindalcos of the world, Tata Steel ahead of the numbers, and of course this China factor. So that help actually came from unexpected quarters and helped the Nifty. Otherwise, we would have also ended flattish like Bank Nifty, or Nifty would have ended flattish like Bank Nifty. And yes, of course, HDFC Bank and Reliance also helping the day.
Yeah, HDFC Reliance, I think, together contributed over 50 points. So yes, that and the metal rally was clearly visible on the likes of Nalco and Hindalco, with that 2.5% surge on the metal index yesterday. But today is the day of the monthly options expiry, so let's take stock of how does the picture look like for now. Well, the rollovers are pretty much on the average side, both to the Nifty and the Bank Nifty. Yes, for Bank Nifty, it's a smidge lower versus the average, but it's par for the course given the kind of weakness that we have seen throughout the series. In fact, if you go by the data, Nifty is down almost 1.5% for the series gone by, but for Nifty Bank, that cut is much deeper at almost 6 to 7%, and that's mostly thanks to the kind of dropping that we saw from HDFC Bank and the other private banking names as well. Overall, if you look at the FII holdings as well right now, the FII long holding is close to around 55% versus 50% that we saw in Jan. However, retail is a lot more cautious. Their long holding right now is 50%, while in December it was around 55%. Overall, if you look at it, this time around, it was short covering, which was largely the trend. But let's also talk about the Feb seasonality, because 5 out of 6 times, February has been another negative month. And even for Bank Nifty, 4 out of 5 times we have seen negative returns come by from the Bank Nifty. So that will be interesting to track. So, of course, Ajay, there's a big queue lined up in the month of February for this series, and that's the budget. But other than that, do you think the seasonality could continue to be at play and we'll see a bit of a red month in February?
Interesting you spoke about budget, because yesterday some very interesting visuals also came in from New Delhi. In the
halwa ceremony.
Yes, garam halwa in the middle of the Delhi chill.
Delhi ki thandi.
Delhi ki thandi. So something very interesting visuals coming in. But again, very small whispers around it have started coming. It is budget. No matter, every market participant says no. It's a lot of things happen outside of budget. This, that. But you can never take it away that it's a very important event from the government calendar as well as from the market. Now, this time, the whispers already started coming. We have got a host of budget khabars in the last 1 month, but whispers have already started coming from Delhi that there would be a 10 to 12% hike in planned capex. Street would like it.
Yeah.
The street wants the words like higher capex. The street just loves all these kind of words. So that is something to watch out for. It is market is not going into the budget event short or long. I think they are kind of neutral. The peak was 22 something. We are at 21 something. So we are kind of with lowish kind of expectation. So probably a short covering in the next 10 days is not ruled out going into the budget is what my view is. But the other host of other numbers which also came in, Anisha?
Yeah.
Absolutely. It was quite a hectic day when it comes to the numbers, and there were the likes of Tata Steel, pretty strong set of numbers, Tech Mahindra, and even Fiat did perform quite well. Bajaj Auto was also being closely tracked by the street, and they came out with an inline set, while some of the names like Aarti Drugs or a DCB Bank, they were underperformers.
All right. So what about Tata Tech Mahindra? What's your take on Tech Mahindra?
Was a bit of a surprise on the top line actually. They reported a 1% growth versus expectation of a 1% decline. But the quality of earnings is still something Street is not completely convinced about. There was a one-off in terms of the seasonality of Comviva business, and there hasn't been much clarity when it comes to the organizational structure that everyone was talking about. They've pushed the can, saying that the details will be out in the month of April. So that's left people a bit more, wanting for more per se. Let's see how the stock reacts. But I think Birlasoft was quite impressive from the entire IT pack. It was almost double than what Street was expecting. But let's talk about the big one, Ajay, and that's HDFC Bank. Because until unless that turns, I don't think there'll be a big turn in the market as such. What are you hearing on the ground as to what was the earnings read-through, what led to that, and what could be the road forward?
Actually, yesterday was a very interesting day. We put out that story at around 3:34. Correct. But the market got a wind of what exactly happened in the numbers and the stock ended near day's high, pull up the intraday. What exactly happened is that last 5 days, last 4 days before yesterday, there was relentless selling in HDFC Bank. It was the FII side which were trimming their positions after a big setback because the expectations were not that weak, and the numbers actually came in on deposit front, on NIM front, slightly on the weaker side. So we got about investigating, finding out what exactly happened. We came to know that there were a couple of things which have gone into these numbers. You should not take these numbers as a norm. It was perhaps a one-offish kind of a number because a lot of things came together. One, our sources close to the management actually tell us that the thinking was that the environment, the liquidity environment would not, it has tightened pretty suddenly. So that also led to some borrowing upward cost movement of the borrowing cost. Plus, this is the first quarter that they have come out with results in a merged entity. The HDFC Limited part, the mortgage part of the entity actually front-loaded a lot of high-cost borrowings. About 1 lakh crore is what our sources actually tell us. That also weighed in. Also, going forward, the impression with the street got that they are slowing down on their branch expansion. Our sources say is also not true. They are rationalizing branch expansion, and 60 to 70% of the deposit mobilization still is happening from vintage or legacy branches. So it's not that you roll out branch expansion today and tomorrow deposit starts coming in. So growth concerns also, there was a very large section of the street which believe that there's a structural slowdown coming in the merged entity. We understand that the entity is taking a conscious call right now to go slightly on the slower side on growth, but focus on getting cost of borrowing better, normalized then going forward. Margins going forward should rebound in the next 2 to 3 quarters, and also the focus is that they would want to mobilize deposits right now. They are gaining market share and the machinery is going fine, but it may take 2 to 3 quarters from here on for the merged entity to come back or rebound on growth. There's not a structural slowdown, but as they say that form is temporary but class is permanent, so you'll have to give them some time. The bank will actually rebound. There is no rethink on the guidance or the estimate which they have given out many times about doubling the book in about 4 to 5 years. So there's no rethink on that one. But yes, if you are an impatient investor looking at sharp rebounds, even after a 2-year underperformance, you may have to wait a little more, 2 to 3 quarters at least.
That's my question. In terms of the institutional investors, and I'm sure, Ajay, you have spoken with a lot, many post this feedback as well. Yeah. What are they saying? Are they throwing in the towel and waiting for better
So there are 3 categories of investors here. I was surprised when I came to know this data, and we'll check it again and put out the formal data, that in the last 14 days, 6 lakh new retail investors have got added in this. So retail is buying.
Interesting.
The data also shows, I spoke to a lot of domestics as well, then in this fall and the last 1 to 2 months, domestics, there are certain domestic funds which have added. It's the FI lot. And you know, this is not new. Remember, Aberdeen was the first one started reducing HDFC Bank a few months back, few quarters back. And of course, Hugh Young moved from Singapore to London.
Correct.
But there's a thinking on the FI side which may be trimming the exposure, and that is what yesterday we also, a day before yesterday, last 2-3 days, perhaps an added weight of FII unwinding of the position because of the norms may have a role to play. But the overall point is that it's the FII community which has trimmed. DIs have bought, retail is adding.
Yeah, and FII has been selling a lot, right? Yesterday as well, there was a 6,000 crore number. I think last 6 days they have been selling on a trot. Over 33,000 is what they have sold, and on track to be the worst FI sell since Jan 2023.
Yeah, absolutely. So that's perhaps for the FI community, but when it comes to HDFC Bank, maybe if you have a little more patience, continue to ride it out. Okay, that aside, let's put the spotlight on what's going on across the globe. It was actually a mixed close on Wall Street. The Dow underperformed, but led by Netflix. The Nasdaq managed to eke out a rally. It has China, which is in the spotlight. Remember that CRR cut, so maybe that index is gaining. But other than that, it's pretty tempered across the Asian screen. Interesting then to find out what the global commentary is centered around. We've got Vinny here to break it down for us. Vinny?
Good morning, and let's start with the commentary that is coming from David Rosenberg. He's highlighting in terms of the liquidity conditions that are about to tighten further is what he's highlighting. Furthermore, he's saying that, you know, overall the work is showing that the global M2, that's the money supply, a way to measure money supply, that has the most significant impact on the US equities and is on the verge of contracting. That's the highlight coming in from him. Other than that, the next commentary we have is coming in from Robert Rubin, who's the former Treasury Secretary in the US, and he's saying that currently US is in a quite of a terrible place, and he's regarded that regards to its federal deficit and called the tax increase to address the deterioration they're seeing over there. So yes, that's a concern he's highlighting. He believes that there is a risk of enormous and some enormous, as well as some of them are materializing already in terms of the interest rate conditions that are shaping up. So yes, a concern that has been cautioned by him right now over there as well. Lastly, we have Bain Capital, the managing partner of Bain Capital in Asia, who's highlighting in terms of the commentary that they are on track to invest around $10 billion in India over the next 3 to 5 years, and India has come both due to its internal development as well as hard work at this level. And yes, they will be making some investments in India. $10 billion is what he's highlighting over the next 3 to 5 years.
All right, thanks very much for giving us that roundup. It's interesting then to get in a word from Bain as well. Okay, let's chat levels. Okay,
is that on your mind?
Yeah.
Chart early morning?
I meant charts, like charts of the index.
I think it's on my mind, the charts.
Oh, yeah.
Okay, so for charts, we've got Kunal here joining in. Kunal, let's get in a sense from you then. We broke that 2-day winning streak. Maybe the banks didn't contribute, but RIL, HDFC Bank were up on the radar.
Yeah, so I think for the first time after 6 days of incessant selling, you saw the signs where there's been a change of open interest stance from traders. Now that's a very good sign, specifically for the Bank Nifty, because that's been one of the more underperforming index. Even if you look at the net performance, for example, for this month so far, Bank Nifty is down some 6.5%, and the Nifty was down till yesterday, I think, to 1.5 to 2% approximately. So that itself tells you the entire last 3 weeks of price action, that it's majorly banking stocks which have added to the weakness and the sudden bout of volatility coming back into the benchmark indices. But yesterday was the first sign, because you saw Bank Nifty rollovers starting to be a lot more positive on the buy side, and I think that's probably an indication that maybe we would probably have found a temporary bottom for many of the private sector banking names as well as for the Bank Nifty. Now the positive part is that since it's an expiry week and the major part of the selling over the last 5 days is behind, this could also have positive ramifications or positive effect going into the February series. So we would now be looking at a point where maybe the banking stocks could become a good buy on dips candidate from here on.
Sticking your neck out that HDFC Bank has bottomed out, because ICICI and Axis both were still down yesterday. So what gives you the confidence?
So yes, the data still indicates that HDFC Bank could probably, at least the selling for HDFC Bank seems to have stopped. So the intensity of sell-off may not repeat for the stock. and that is a first good sign. So, we are not looking out for a V-shaped recovery, but at least a further selling is something which has to stop. Then a gradual build-up of positions, maybe consolidation for next couple of weeks, where the stock establishes a trading range, and that's where comfort gets back into the markets.
So 1430 or thereabout is the area to start.
Yeah,
If
so
it comes around that, because that's exactly the zone where it rebound from.
So 1380 was the low the
Okay,
stock made on
1380,
spot
okay.
levels yesterday. 1400 broadly is where
Broadly.
we'll keep our supports.
Okay.
Okay, point taken. I also wanted your word quickly, Kunal, about the metals as a pack as well. Yesterday they showed quite a sharp rebound. Do you expect that momentum to continue?
I strongly believe so, Anisha, because what's happened is metals are high beta sectors, and in a market which is corrected by 500, 700 points from the last 1 week price action, we've not seen a major cutoff or a sharp reaction on metal stocks in the last 2 weeks of price action. That's generally a comfort sign, and when these stocks get into a bounce back from their 50 DMAs, Tata Steel, SAIL, etc., that's generally considered to be a very positive sign for these stocks, which means that the trend is intact. The beta is not too high for these stocks as compared to what a normal trend or a downtrend suggests. And I think that could probably indicate that whenever there is any kind of a recovery or news flow or positive data points, these sectors would manage to pick up pace once again. So, would be very bullish on many of these metal names, the likes of Hindalco, Tata Steel, SAIL, etc.
Okay, let's find out then, Kunal, what exactly you're looking at in terms of individual recommendations. There's some IT on your radar?
Well, yes. In fact, one of the sectors which have been very resilient over the last 1-2 weeks of price action is IT, large cap IT names. Infosys is what I would pick up in terms of the price action. Yesterday, the stock gave a fresh breakout about 1675.80 plus mark. So, would suggest a buy with a target of 1750. Stop loss to be kept at 1645. And Godrej Consumers, in fact, many of the FMCG names also start to show signs of pickup in terms of pace. Godrej Consumers is a classical chart, inverted head and shoulder pattern on the charts, MACD breakout on the intraday time frame. A lot of positives from a short-term play, would suggest a buy with a target of closer to 1200. Stop loss at 1150.
Okay, thanks very much for running us through all of your top recommendations. Time to move on then and discuss individual stocks that are in the spotlight. We've got Sumit here to discuss just that. And Loris Labs in the spotlight on the back of numbers and missing street estimates.
Well, as the numbers came in at the fag end of the market, and I guess the street was just trying to figure out if there was any one-offs in the number, because if you see the net profit, they missed the street estimates by nearly 78%. It was not that the revenue and EBITDA had met the estimates, they were also below estimates by around 14% revenue side, 34% miss on the EBITDA front. Now, if you see, for the last 6 consecutive quarters, Loris has been continuously missing the analyst estimates, and the range has been pretty much wide. In the second quarter, they missed the analyst estimate by around 15%, in the following quarter by around 8%, and in the last 4 quarters, if you see, anywhere between 49 to 78% has been the miss when it comes to the profitability of the company. Now, what was the story this quarter? API sales were impacted due to transitionary shipment impact and because of subdued pricing for other APIs. CDMO sales were impacted due to decline in revenues from one of the key products for them. Apart from that, it was the higher R&D cost and sales cost which impacted the EBITDA because there were higher spends towards CGT and the animal health segment. Also, if you see the company's net debt, that has again increased by around 500 crore rupees, and the net debt to EBITDA has now actually doubled in the last 1 year. Now, in terms of outlook, the company is guiding for a better Q4, but do remember, post completion of Q2 results, the company did mention that H2 would be better, but Q3 has not turned out to be better. But now they are saying that Q4 might turn out to be better, and they're also saying that there might be some delay in qualifications of the animal healthcare project due to a couple of facilities which have not yet been qualified. So this might be delayed by a couple of quarters. And on the valuation front, if you see, the stock's expensive 12-month forward P is around 33 times, and the last 5-year average P stands at around 22 times.
So actually, we have seen it before. It gaps down 7-10% and then rebounds and normalizes. So when they guided for better H2, they could have just said Q4.
Yeah, right, exactly.
So maybe that's what the hint is to the market. It'll be interesting.
Don't you think, Kalami is skeptic here, but don't you think this has been happening? The movie has been repeating time and again.
Last
every
6
quarter.
quarters. Last 6 quarters
Yeah,
to be
imagine.
specific.
I don't know, why would people continue with such names? But let's see whether the stock does rebound today or not. But the other one is DLF. And it seems like that the entire real estate pack is sitting at a very interesting inflection point, right? What do the numbers, suggest first up, and what are the brokerages calling out for the future outlook?
Well, it was yet another record quarter for DLF, 15-year high quarterly profit that we have seen. Pre-sales was around 9,000 crore rupees, and this was aided by 3 successful launches which which aggregated to around 5 million square feet and contributed to the most of the pre-sales, around 8,700 crore coming in from these three projects itself. Now, this takes the cumulative pre-sales at around 13,300 crore, which is clearly ahead of what the full year guidance was given by DLF. So most likely there would be some upgrade coming in for the full year number also coming in from DLF. Now, apart from that, DLF has laid out a quite aggressive development plan going forward. 16 million square feet of land that they're planning to develop, which will take the future pipeline to nearly 33 million square feet, which is more than double than what they had given earlier. And the gross development value stands at close to 89,300 crore rupees, which is also again double. Earlier target was around 43,600 crore rupees. The rental portfolio that also performed well, 20% healthy growth when it comes to the PAT number. Occupancy portfolio was at around 92 odd percent. Now, given these facts, the numbers are pretty strong, the outlook is pretty strong, but there is some part of the street which is now concerned when it comes to the valuations. CLSA had come out with this report where they were saying that the valuations have now turned expensive. If you see the net asset value, it is at a premium of, the price is at a premium of around 17 odd percent compared to what the net asset value is, and the average peak of premium that we had seen for such kind for DLF was at 15%. So it's trading well above its peak valuations as well. That's what at least the CLSA report was suggesting.
Actually, CLSA has ruffled quite a lot of feathers. That note that bulk of the large cap, or I would say main key stocks, have started pricing in all the upside of this real estate cycle actually is something to note for. We'll scratch that point a little later as well. But the one more stock I want to talk about, that is TVS Motors. If you look at the numbers which came out of all the two-wheeler companies, this one actually, you've seen the numbers?
Yeah.
TVS Motors, amazing numbers.
Amazing. But Bajaj Auto numbers were also pretty much good. Couple of upgrades
two-wheeler
also
clearly have
coming
turned the corner, it appears.
in. Yeah, it seems.
Pull up the stocks also. If you look at the stock price, it's not that stock prices are not already factoring it in, but you will say that at least the movement of the stock price is moving in tandem with the kind of performance. 2,000-2,100 is what TVS is. Bajaj will also come up. Hero has been the biggest surprise mover, almost 7,200. Kunal, would you like to have a quick check on all the three charts? Which one would you look as the strongest one out of the three?
See, undoubtedly the strongest one is Bajaj Auto so far. That stock has done exceptionally well, especially with the news for buyback for the stock. I think that's changed the texture for Bajaj Auto completely. The moment the stock had broken past about 6,600 odd levels, I think you saw almost an 800 to 900 point move for the stock, closer to 7,400. But yes, Hero MotoCorp is also the other surprise one. That stock has completed many bullish patterns on the charts, weekly flag formations on the stock, then a swing breakout on the monthly chart. So I think a lot of positive formations for Hero MotoCorp. So I think it's more of the entire pack moving now in tandem, which was more of in a disarray maybe in the last couple of quarters back.
All right, there you have it. That's the word on two-wheelers. Lots more stocks to discuss. Amit, thanks very much for giving us that heads up. We'll take a very quick break. Be right back.
So Z refuses to go out of news, and the latest one, of course, after a 30-35% fall day before, it saw some rebound. But yesterday, NP Singh, the CEO of Sony Pictures, who was also looking at that the top post at the merged entity, and was the issue, it was one of the bone of contention that this transaction couldn't really proceed, has written a letter to its employees saying that they are committed to scaling up the business operations even when this particular transaction got aborted, and they want to explore organic and inorganic possibilities, which means one, they are wanting to scale it up. They know that if they do not scale up their business, competition is rising. And the other is that beyond this asset as well, they are looking at other opportunities. But Z, meanwhile, got a very good rebound. Look at the Z chart yesterday. There is a view in the market that beyond Sony too, there could be buyers of Z as an asset. On the other hand, Z has also triggered some amount of litigation, fresh litigation against Sony, why this transaction got aborted and all of that. And my colleague Ankur is tracking that story. So let's get that view coming in, and then we'll do a chart check on Z. Ankur?
Yes, so Z Entertainment has taken legal recourse against the termination of merger with Sony, and in an application which has been filed with National Company Law Tribunal Mumbai, it has asked to implement the merger which was approved by the court. Remember, last year NCLT had approved the Zee and Sony merger, and after that both the parties tried to implement the merger, but on December 21, 2023, both the parties decided that they will have negotiations in good faith whether or not to extend the merger timeline, and after that Sony finally terminated the deal and sent a notice to Zee Entertainment and also asked for a compensation of $90 million. Now, as far as arbitration proceedings are concerned, Zee Entertainment is demanding that that should be withdrawn, and also court should ask both the parties to implement the merger.
So this is what Zee has actually triggered a litigation against Sony. But we also gather, my colleague Aishwarya actually has gathered that there are some, the regulatory agency ED is also sniffing around and searching some of the premises of SL Group on a certain matter. Aishwarya is here with more on that. Aishwarya, tell us, what do you gather and how long have these searches been going on?
Well, amid all that is happening with Zee Entertainment Limited, we've learned from our sources that ED since this morning around 10 a.m. has been conducting probes as well as inquiry at their continental office in Worli in Mumbai at the SL Group premises. Now, ED has been making search, as we mentioned earlier, since 10 a.m. this morning. The companies that will probably be under scrutiny and are in this particular premises in the Continental building include Zee Media Corporation Limited, include Zee Learn, Mount Litra Education Foundation, SL Homes Private Limited, as well as SL Infra and Housing. So these are the particular companies that are part of this particular premises that we're talking about. Although the details of the probe and the inquiry are still unclear, what we've learned so far is that the ED inquiry and probe is ongoing, and we'll keep you updated on what exactly the details of the probe are going forward.
All right, thanks Aishwarya for that. We'll continue to map out the story and keep you up to speed with all the latest details with the Zee Sony legal saga now. Sanjeev Bhasin joining in on the show. Hi Sanjeev, lots to chat about. Why don't we start off by talking about earnings? Anything that stood out to you? Bajaj Auto, TVS Motor, Tech Mahindra?
Yeah, good morning. So, Avan, I thought Birlasoft numbers were very, very smart in the mid-cap. And that has been the trend. I think mid-cap IT has been far better than large cap. But that is understandable. Now, we know that Tech Mahindra had priced in the worst. And they had some issues with their BFSI space. But the transition has been rather well. And I think that can be a relative outperformer. On the other hand, Tata Steel really was the star. Even though volumes fell, I have never seen double-digit strong earnings EBITDA, which has been very, very positive for a company like Tata Steel. So I think metals, given the proxy of China's RR cut, can be a very, very good play. And Tata Steel has definitely, beaten expectations. Now, the big underlying remains how fast can they divulge their Chorus assets, which are actually quoting at 3 times the price. And once the leverage comes down, return on equity will improve. They have anyway brought down their debt. So I would say Birlasoft, Tata Steel and Tech Mahindra, all three are relatively good. In the banks, I think there is too much of pessimism. I thought Axis Bank numbers were rather better than expected given the large base of the wealth acquisition of Citi. And we know that the deposit franchise has been in a little bit of a problem because of liquidity. But I think that's part and parcel. If you are going to look at credit growth, then I think both Axis and HDFC stand to be bought at these prices.
Sanjeev, morning. Sanjeev, how did you check out the two-wheeler company's results? Amazing price action, and especially Bajaj and versus TVS. Your thoughts?
So, Ajay, good morning. I think they are all priced to perfection. There is at new highs. For me to ask them to be bought is difficult. Bajaj is in our portfolio since a long time. And, the biggest thing for Bajaj is their reinvention. They keep reinventing themselves. It's now the two-wheeler, their two-wheeler on the CV side, their three-wheeler on the CV side, on the EV side, all they are gathering momentum. Plus, their export market has done extremely well with a weaker rupee. And Bajaj continues to be the top pick along with Hero. On the other hand, Ajay, I think they are mostly priced to perfection. The only stock I could suggest is another one as a disclosure in my portfolio from 1600 Balkrishna Industry. I think they were really standout numbers. Balkrishna is an MNC. You cannot have tire companies not do well when China imports have stopped, and it's the largest it's the largest player in the retraded market. So I would still put my money on Balkrishna Industry for a target of 3,200.
Sanjeev, Balkrishna gave out good numbers, no doubt about it, but they've also pulled back from sharing any guidance and all of that. So that is spooking certain section of the market, saying that probably it means that there could be softness in the exports and people are looking out for the 11 o'clock con call, which we'll also track. But do you think it's any matter of concern?
Well, there will be, see, you are at a high plateau. There will be some companies which will try to guide. And it's understandable. It actually speaks well of managements which are trying to give you any future misgivings that you will continue to grow at that rate. And we know that that is part and parcel. But overnight things change. This big RRR cut by China actually puts more liquidity in the system. It makes China's consumption, which has been a laggard, start to come back. And now a large part of the India's supply chain does still exist with China. So I think yesterday's development should be an added spoke. We'll wait for the conference call.
Okay.
Okay, fair enough. That's the view coming in. In the meantime, just curious to get in your take then on all that's transpiring between Z and Sony now. Quite an ugly legal battle going to be playing out between the two entities. Yes, yesterday we did see some amount of reprieve in the stock price, but at 166, Sanjeev, what's the take?
Awan, it's like I said, Saas Bahu ka serial which is going on. Unfortunately, we are at the receiving end. We have a big position in Z. We are very confident of the business. 16,000 crore market cap for a media company like Z is unmatchable. Get rid of the Goenkas with 3% stake. They are holding 62% of institution and mutual funds at ransom. I mean, where have you heard of this? So I think all the noise and humdrum will see some big player come back. I am keeping my fingers crossed. But you will every day have to see the volatility, which is immense because of the underlying, sentiment change which happens. I don't think they can walk away with this so easily. There will be some tinkering and talk, but the faster they can get rid of the Goenka, I think that will actually trigger a huge amount of upside in this over a period of time. Suitably, arguably, this could be one of the best MNC media stocks once all this, this clutter settles. So we will wait as silent sufferers and wait for the institutions actually to take a step. This should be a guiding force. 33% stake, you're being held to ransom.
They are doing that. We gather from our sources that a bunch of domestic investors have come together and have written to SEBI, and they will be calling for a special EGM very shortly to take the matter of leadership of the company and the kind of value destruction which is happening forward. But I wanted a view, Sanjeev, on HDFC Bank. Yesterday we put out a story. We spoke with our sources very close to the management, and they're saying that in the near term, so one is that you can't write off HDFC Bank. I mean, they understand that the growth appears slow in this gone by quarter, but it is not a structural slowdown. But they also go on to say that 6 lakh new retail investors have added this stock in the last 14-15 days is what our sources tell us. They're saying they'll prioritize margin in the near term and profitability versus growth. And once this high cost borrowing issue peters out in the next 2 to 3 quarters, growth will rebound. You think it should be added closer to 1400 odd?
Yeah, Ajay, as a disclosure, we have been doing a SIP in the last week, and we think that you cannot get a pedigree bank, the 5th largest in the world, which is undergoing a process. You must remember HDFC was a mortgage institution, not a quasi bank. And now the cost of deposit of replacing that high cost of deposit will take some quarters. And in the meantime, the margin has been under pressure because of this merger. But look at the behemoth. On one hand, you are saying DLF's earnings, the real estate going through the roof, and the largest mortgage lender only underperforming. How can it be? Secondly, they have always sacrificed, slight bit of growth, but not let go of their margin. 3, yesterday, 2 crore credit cards, they've crossed that number. 4, and out of incremental deposits, 19% in the system comes in with them. But now the base is large. The problem is this is a very heavily owned FI stock. and the norms for SEBI for disclosure of promoter entities and so on meant some compulsorily unloading. I think the fear factor has played out perfectly. If there is a perfect storm, it is now, which is in the private banks, HDFC, ICICI, Axis. Read my lips. If you do a SIP here for the next 3 months, you'll be laughing your way to the bank by the end of the year.
Okay, point taken. We did have an exclusive conversation with KV Kamath as well as to how the financial system is expected to pan out, this liquidity tightening, this entire fight for deposits as well. Listen into what he had to tell us.
I won't name any bank, but the order could change based on their ability to use technology and the heart they have to use technology.
But a 5 could become 2 or a 2 could become 1. But do you see that the top 5 banks in India, a new bank could become an entrant?
I would think that it is very difficult for a new bank to come in there because there's a whole lot of base foundation built up. And if I look at it anywhere in the world, the last 2 turns were tiger economies and before that Japan. The incumbent banks became stronger and stronger. So the top 5 banks certainly will remain strong. There will be a good base of other banks. But the base that the top 5 banks have built is very difficult to replicate.
All right. That's a view coming in from the banking veteran KV Kamath. Meantime, let's get in some chart checks going as well, and just taking a look at what transpired in yesterday's trading day. Yes, the frontline index managed to gain about 1%, but the broader markets as well joined the party. It was a smart outperformance for the mid and the small cap indices and a whole host of names that did participate. For instance, you had something like a Hoodco that was active, HFCL 12.5%, and Mishra Dattu that gained as well in double digits. Kunal, have you tracked the charts of any of these names?
Yeah, I think I do track Hoodco as well as HFCL, and this clearly indicates that the correction which is going through in the market is not a change of direction, but it's clearly just a correction in place because the high beta stocks, the mid cap names, they are not anywhere closer to any kind of a major froth, because had that been the case, then you would probably have witnessed at least a 8 to 10% cool off into many of these stocks, and then a downtrend which would have been probably more prolonged for these names. So I think that's a positive sign emerging. Hoodco, many of the other PSU names, I think they've done exceptionally well for themselves. I think the stock from 119 to 20 mark, which was the breakout point of a flag formation, I think has moved up quite well towards 165. We can just expect that this momentum and the trend would continue for the stock with intermittent pauses in between. HFCL on the other hand, I think is a fresh breakout case because the stock has completed a major consolidation. I think for the last 3 years, if I'm not wrong, 2021, the stock was stuck into a range where 85-90 approximately was the resistance and closer to 60-58 as a major support for the stock. So what we're looking out for is a breakout which could be at least a 30-point of breakout from those 85-90 levels, which should take the stock closer to 120 plus.
Okay, point taken. So that's the take on some of these stocks. But Mr. Bhasin, what do you make of Raymond as a stock? This morning, the reports again circulating saying that the talks between the two parties has collapsed yet again. What should investors do right now for Raymond? Because even the real estate cycle is getting a bit shaky now.
Good morning, Anisha. So what's happening on Z, the soap opera is actually playing out in the perfect sense live over there in Raymond. So keep your fingers crossed, pray to God that some sense comes and you see a settlement. But these are tough to call. The emotions and legal battles are very, very difficult to predict. So watching the soap opera on both Z and Raymond.
There is a difference, there's a fundamental difference there, Mr. Bhasin. I differ with you a little bit. What is happening is Z is directly impacting the financials of that company. But at Raymond, whatever is happening is actually inside as a personal matter. The financials or the fundamentals of the company are completely, kind of insulated in many ways. Yes, there may be a little bit of pressure on the stock. It went to 1500 odd, came back at 1800. But we just had the management 2-3 days back, the volume on the real estate front and even the regular business. It will be interesting to watch 1st of February when the results actually come out, whether there's a section of the people believe that it may not impact the financial or fundamentals. But yes, sentiment wise, it does have a bit of a bearing. So that is
Yes,
something to
Ajay,
watch out for.
You are right. I think maybe you misread what I meant. I was just trying to be little, make it little humorous, but I'm not meaning it's a personal matter. If you recall, even Jeff Bezos went through a rough divorce when it went. It's not that the Amazon stock plunged. For them, it's a minuscule what they pay as a settlement. The underlying asset, the underlying business of Raymond's and the land bank they have in Thane remains robust. So I continue to think the business is robust. All that happens is that now when you become such a big entity or a corporate head honcho, your personal matters do make a difference, which is what is happening over here. And sentiment at a
Mr.
time
Vasim?
when you are at new highs and there is worry across the board that what sort of impact this can have does play a sentimental change. But like I said, if Jeff Bezos could get away and Amazon stock only gone up, same will be the case with Raymond, where fundamentals on
Will
of the
prevail
company
eventually.
will play a larger picture.
No, fair point. No, Mr. Vasim, we are just having a discussion, a healthy one. Yes, in fact, on a lighter note, since you brought it up, the stock of Amazon actually, surged 50% from that incident. So that is something which happened out there.
Let's see whether it happens here or not. But for now, it continues to be an ongoing, deliberations there at Raymond. But Mr. Vasim, on that note, we let you go. Appreciate you making time and joining us this morning. Shifting focus to budget, because that's the big one to watch out for in the coming week. We have my colleague Samir joining in to talk to us about what more we can expect from the budget, especially when it comes to the FAME scheme. Samir, take it away.
A major announcement giving relief to the auto industry might make a way in the upcoming union budget. What we are picking up from our sources that the incentive disbursement under the PLI scheme for the auto industry or for the beneficiaries, currently it is annually. The annual disbursement is done and it could be revised to quarterly. That's a long pending demand of the auto industry. They have been pitching to the Ministry of Heavy Industry and to the concerned government offices that the incentive disbursement should be revised and it should be made quarterly. Industry is of a viewpoint that the quarterly disbursement of the incentive under the PLI scheme will give further liquidity, will improve the cash flow to the beneficiaries, and this will further help to improve the production cycle as well. The production could be upskilled, and that's the view that industry is having. And moreover, what we are also picking from the sources that the Ministry of Heavy Industry has largely given a consent to this demand and in the same direction. So as to implement this, more testing agencies could be included as part of the PLI scheme so that this demand could be meet up. So this demand that is there in front of Ministry of Heavy Industry, it is likely to be tabled to the Finance Ministry, and the entire move could be announced in the upcoming union budget, and this will give a much needed boost or relief to the auto industry. We all know that the government has already announced a PLI scheme for the automobile and auto component industry to the tune of rupees 26,000 crore.
All right, so that was something to expect on EV front, this budget. Now we have Pankaj Pandey who's coming in to talk more about fundamentals. Pankaj, I'd like your opinion on Exide. In fact, both the battery companies, Amara Raja and Exide, have done pretty well in the last, say, few weeks or so, because people started realizing the value which they, just like Bajaj Auto and TVS, beyond legacy, people started recognizing their EV initiatives and business which has grown. These guys also, apart from legacy battery companies, are now increasingly being seen as EV battery and recyclers as well. Do you think market will continue to focus on that angle more than the quarter to quarter what they report right now, or do you think quarterly performance will weigh over the previous hypothesis?
So hi, good morning. Thanks for having me. I think on Exide, the overall numbers for the quarter looked slightly lower than what our estimates have been. So while volume growth for the industry was some 16-odd%, the company's top line grew by 13-odd%. And so which is why numbers were slightly below expectation. But I think Exide and Amara Raja, we like both the companies largely because of the perspective that Exide is one company which is taking tangible steps in lithium-ion battery manufacturing space, and it will be the first EV cell manufacturing company. So obviously it has or it will get a first mover advantage. So this is one stock which has been our conviction buy for some time, and with a target price of 335, we'll review the target prices. We like both the companies structurally. I think valuation-wise also is quite comfortable for both the counters.
There's still some value on the table regarding some of these battery makers, but metals were under spotlight yesterday. What about today? Because of course JSW Steel will come out with its earnings, but Tata Steel already reported a decent set of numbers. What are the internals? Let's go across to Sesha to find out what led to the beat in the domestic business and what was the sore point when it comes to the Europe performance, Sesha?
Well, yes, Tata Steel has reported very strong set of numbers. Revenues are largely in line with what we were working with, but a big beat has come in as far as EBITDA and margins are concerned. Margins, in fact, have come in at 11.3%, much better than 8.5% ET Now poll, and even on a sequential basis, margins have expanded a whole lot. India performance continues to show resilience, although European operations have reported losses for the 5th consecutive quarter this time around. India revenues are largely stable on a sequential basis, but India EBITDA per ton has seen a solid uptick of about 27% on a sequential basis. As far as Europe operations are concerned, as I mentioned, it continues to be a pain point for the company. Lower volumes and lower realizations impacted UK performance, and as far as Netherlands business is concerned, that too reported weak set of numbers this time around. Capex was largely in line and net debt has risen marginally this time around on a sequential basis. Morgan Stanley, in fact, has come out with a note where they are maintaining their equal weight stance on the stock with the target price of 120. They said domestic performance was very strong this time around, although Europe performance was weak this time for the 5th consecutive quarter. Domestic EBITDA was aided on account of higher realizations and lower cost of production, but consolidated EBITDA this time around was much better than what the street was working with, despite weakness that we saw in Europe. All in all, good set of numbers have come in from Tata Steel.
Okay, thanks very much for that, Ashesha. So Tata Steel at 135 already. 2 quarters back, when the management did guided that the operations will improve, it was hovering at around 100, 105. Remember, Kunal, 2 quarters back, the stock has been late boomer as far as the commodity stock rally is concerned, but now at 135. Would you hold on to the long positions if you have any?
Well, absolutely, yes. In fact, it's a very good time to now scale up more long positions over here also for Tata Steel, because, this is what we typically look out for, when stocks generally have positive data points to add up to the ongoing trend, the sector looking attractive, many of the stocks which have done reasonably well, and the stock which has been a high-weighted stock remains to be an underperformer. These are the events which could probably act as catalyst towards building up of new trends. So, would be bullish on Tata Steel.
In fact, the 920 guest today which we have, which is Kenneth Andrade, who's launching a mutual fund as well now. He is also one of the contra guys in this market. They are actually quite heavily loaded in favor of metals, especially at a time that large part of the market is saying China is slowing down, US is slow, metals won't perform. These guys are loading up. So maybe we'll have to scratch that point. I'd love to scratch that point a little more with them. But there's another company which came out with very good set of numbers yesterday, Pankaj, and that is a rating agency. Again, not very often discussed, but look at how CARE ratings have come out with spectacular numbers, and one would expect that. I mean, in a booming economy, obviously the work for a rating agency to rate the paper, improved borrowing, for corporate India, if the paper goes higher, all of that work and a lot of consulting work which these rating agencies have started doing. At 187, have you looked at the numbers of the valuations? And especially, there were half a dozen other rating agencies which had come up, which the regulators clamped down upon. So now it's almost like an oligopolistic market. Only the top tier, CARE, ICRA, are the ones which are getting bulk of the work. Do you like that stock?
So haven't really tracked the company, but structurally, yes, things will look good for some of these rating agencies, because government or RBI is also sort of pushing banks to sort of chase corporate bonds, plus also even a lot of fundraising can happen from the corporate side. So obviously that will require rating as a services. So outlook is good, but I think within the BFSI space, what we like the most is most of the PSU banks. I think these are the banks where credit deposit ratio is quite comfortable. Overall asset quality has been sort of fine for most of the banks. ROAs are inching towards 1, or some have even crossed more than 1. So I think PSU banks within the BFSI space look very attractive to us for the next 3 to 6 months, or even for a year.
Sure, that's good to hear. But Pankaj, what's the view on IT, especially, the numbers coming out from Tech Mahindra, even Birlasoft for that matter, were quite strong. What do you make of it?
So Tech Mahindra 1% or 1.1% growth obviously is better than what was anticipated. I think the bigger overall improvement is expected only when the company comes out with the full year guidance after next quarter. But I think this is one company which hasn't done much of a price performance, trading at 13, 14 times. And our sense is that probably a change in strategy from M&A-led growth to a more organic growth will be a key positive. And margins have bottomed out. So we are liking Tech Mahindra quite constructively. I think on Birlasoft also numbers were quite good with 1.8% kind of a growth. So this is one company which also has been sort of doing well in the tier 2 space. Margin at 16% looks sustainable. So from that perspective, even this company also looks attractive to us.
Okay, so that's about Tech Mahindra as far as Birlasoft. But let's listen into the management of Tech Mahindra, because they did talk about how certain verticals are showing signs of recovery, and at least telecom seems to have bottomed out, but there's still area of weakness when it comes to high tech as well as BFSI.
We have embarked on a turnaround phase in TechM's evolution, and we are actively making foundational moves to upgrade our performance. The overarching goal that we have in this phase is to make the investments and the changes to maximize our long-term earnings growth, to drive a culture of performance in both delivery and in sales. We're in the process of defining our long-term strategy, which will then be effectively implemented to give the long-term value for our customers, for our employees, and for our shareholders. In the previous earnings call, I had shared the fact that we are embarking on 3 tracks to unlock the value from our operations. The first track is for sales improvement, or the revenue growth track. The portfolio companies are also being integrated under the respective business units.
Okay, so Tech Mahindra management, okay, steady, good numbers, I would say, as Anisha was also discussing earlier. Steady, confident guidance, but no interactions, right? That is what is disappointing you. You would have wanted to management to come out and answer when exactly will the big turn actually start coming in.
Yeah, and you are used to seeing and hearing the management commentary, and this would have been the first time the new CEO would talk, in the earnings as well. But it was a bit disappointing that they're not speaking that turnaround strategy that everybody has been banking on for the last 2 to 3 quarters. More details would have been something that Street would have lied. And again, they have said that perhaps we'll come out with more details in April, because right now they're talking about sales improvement and margin expansion. I mean, these are given, right?
Sure.
I mean, obviously you're working for sales improvement and margin expansion. So what comes of it, I'm not sure. But let's see whether the stock reacts.
There's also something, at the promise started getting built into this one right at the announcement of the new Mohit coming in. So I think people jumped onto a little ahead, and one would have waited a little more in delivery and then probably, but yeah, that in the meantime you'll have to be a little more patient going forward. Anything else on your radar? Yeah,
no, so these earnings were quite impressive, and also were TVS as well as Bajaj. So I want to, Pankaj, ask you about those numbers, because TVS, we were working with that 10% margin, and we were very excited when that happened. It's already now past 11, and apparently now Bajaj Auto is expected to come out with a CNG-based Chetak next year. What do you see the prospects of these 2 companies now?
So on Bajaj Auto numbers, especially margins at 20% are pretty good. This is despite the fact that there was a bit of adverse product mix, three-wheelers being lower compared to sort of 2-wheelers. I think the numbers were good for Bajaj Auto. The only challenge is that it's trading above long-term averages in terms of valuation. And also the export segment of the market will take some time to sort of recover, because some of the key markets are still sort of struggling with the dollar shortage. But don't expect much of a downtick in the stock, because numbers were quite good. I think TVS continues to remain an outlier, especially given the fact that now EV volumes are nearly 4.5% of the overall numbers. I think that is one thing which is sort of helping the stock keep outperforming their respective peers. So I think TVS looks structurally more positive if they are able to sort of keep doing well on the EV side. I think Bajaj also is also okay, but valuation-wise, like I said, is on a higher side. So which is where between the 2, TVS relatively looks better.
The other stock which I want to discuss this morning, extremely important to bring up, is that the way how some of the manufacturing companies are widening their services bouquet. Pull up Amber. What has happened this morning is that Amber Enterprises, the stock has already started moving from 32 odd to almost 38, 39 odd and tipped off. Kunal, I'll come to you on that one in a bit. But what has happened is that Amber Enterprises this morning has announced a joint venture with Titagarh Wagons. Yes, that's correct. A company which is into engineering services for electronics and consumer durables and ACs, of course. Yes, that was their biggest legacy business, and is now kind of gradually tilting towards railways, because there's a lot of work in railways also which complements their current business model, and not many know that they are also ramping up their heavy air conditioning business, which is actually railways. And if you've been traveling by railways recently, you would see that the quality of the new India railways actually is going up. All of them are air conditions, and we're talking about what is this new railway which every now and then our rail minister keeps on, what's that?
Vande Bharat.
Vande Bharat. Every Vande Bharat has got high quality air conditioning, and Amber has entered that business. So that can be a big institutional business. Now they have also entered into a joint venture with Titagarh. They are forming a company. We'll get the management and we'll probe them a little more. But Pankaj, if they indeed move away from traditional AC to all these railway related opportunities and much more, would the street give them a slightly different multiple?
So don't track this stock, won't be able to comment, but we see a lot of companies venturing into railways. I think Ramakrishna Forging, for an example, is venturing into wheels. So from that perspective, railways as an opportunity is looking very good. Only worry is that the kind of front-ending of revenues which is being built, or the kind of valuations some of these stocks are commanding. We would prefer if there is some bit of a consolidation which happens in between.
No problem. We'll get the management later in the show around 9:45. So you better tune in. Some interesting conversation will happen there. But Kunal, on the charts, the stock has been a quiet mover after some 4-5 years of absolute no movement.
Well, absolutely. So this was something on the radar in terms of the bullish calls which I had given earlier. And when we look at the last 3 or 4 years of charts, it's interesting because the stock started to correct from 4,000 levels in 2021 second half, and from there 4,000 levels the stock had corrected more than 50%, fallen down to 2,000, and now it's come back to the 3,800, 3,900 mark, which means in the span of the last 2.5 odd years, the stock has gone through a 50% correction and then almost like a V-shaped, U-shaped recovery in terms of prices. This is a very good indication that the stock or the entire negativity is out of the stock, and we are now looking at a start of a fresh uptrend. Typically, we look out for, when stocks make fresh lifetime breakouts, we look out for at least a 15% swing return over a span of the next 1 to 3 months. So expecting the same for Amber, and from those 4,000 odd levels, we could be looking at least a 15% upside, which means closer to 4,500, 4,750 odd as a near-term target.
Okay, so that's Amber Enterprises. Just marking a few stocks which are reacting in pre-open. Of course, we'll have to give time for these rates to settle, but Chalet Hotels is likely to open with a gap up of 6%. Motilal Oswal had seen a sudden surge of 12 to 15% post its earnings. Today as well, it's showing a gap up of almost 5% on that one. Sterling Wilson Solar continues to be locked in upper circuit for third day on the trot. It's likely to open with a 5% gap up. Tata Elxsi, Birlasoft, DLF, Bajaj Auto, these are some of the other names which are showing gains of 4 to 5% to begin the trading session. So a lot of these result reactions are getting thumbs up from the street, whether it's DLF, whether it's Birlasoft, and of course others as well. Even TVS Motors, for that matter of fact, is expected to open in the green. Can't say the same about Laurus Labs. Take a look at that one. It's showing a cut of 10% to begin the trading session with. Let's see whether it actually happens or not, because clearly there's a big disappointment on the street. For the 6 quarters, we have seen disappointment time and again. Whether people throw in the towel today or not is a big question. Interestingly, Tech Mahindra is quite lower, and so is Infosys, even ICICI Bank, HDFC Bank. But yes, very initial rates, so difficult to take a call. But Kunal, if I can ask you about Laurus Labs, is there any level where you think buying will emerge? And similarly, specifically on Tech Mahindra, is there a level specifically we're watching out for?
I think Laurus Labs, the stock is already at its major swing lows. 700 was the high for the stock. The recent low was around 300, 320, and still at 400 levels. So it's not been an encouraging chart for Laurus Lab even after the last 2 months of mild recovery. The volumes have been very, very tepid into the rise for Laurus Lab. I think that's the bigger concern, because when you're looking at a resurrection of sorts, you would require more or higher volume participation. That has been a miss for Laurus Labs. Tech Mahindra, on the other hand, I would actually believe that it's quite a strong stock. We've seen many of the large cap IT names actually doing pretty well for themselves. So I would probably expect the stock to get into a recovery of sorts maybe within the near term.
Motilal Oswal actually was an outstanding set of numbers. And you know what, Anisha, I met Mr. Motilal about a week back, and the one point which was my biggest takeaway from that chat was that he was emphasizing on the fact that how their business is no longer very cyclical. He was saying that yes, we are not very happy the way large part of the market is tilting towards F&O. But what is happening that this F&O is a 12-month phenomena. F&O volumes are high in a weak market and in a strong market. Investors
only a bull
flock
market
to them.
phenomenon.
So he's saying that across their businesses, this F&O or the rise in the trading community is actually the cyclicality of the capital market is going down because of that. But yesterday was a blowout number, 2,000 crore or something of that kind of profit coming in. It was locked yesterday and another 4% today. One more stock which catches my attention, pull up TRIL. Trill. Yesterday it was, God knows why, locked on a 20%
Yeah, it was
circuit.
20% higher.
And were there results? I don't think so.
No, I don't think there were results. I think it is probably a trickle-down effect of that solar announcement as well as the overall capex in the system. I don't think the numbers are out yet,
7%.
but definitely in on a lot of investors' radar from the power ecosystem. Anything on the charts? I know it's a cash stock, but if you track this one. Fair enough. So that's the latest coming in as far as transformers and rectifiers is concerned. But let's take the mid-cap bets now, Kunal.
So it's an interesting mid-cap name. It's a buy on Tega Industries. That's a stock which yesterday managed to come back towards a breakout of 50-day moving average, as well as the double bottom formation on the daily charts. So would suggest a target of 1200 and stop loss could be kept at 1110.
All right, that's the top recommendation from the mid-cap space. Pankaj, good to have you on board. Thanks so much for joining in. Enjoy the long weekend. Okay, let's take you through some of the other top stories that we're tracking. And as India gears up to celebrate the 75th Republic Day, preparations are on in full swing, right from the marching bands as well as the rehearsals, all those being performed on the Kartavya path. Meanwhile, you have the President, Draupadi Murmu, who is scheduled to address the nation on the eve of this historic occasion at 7 p.m. this evening. Meantime, French President Emmanuel Macron is visiting Jaipur today as part of his two-day state visit to India. He will be joined by the Prime Minister Narendra Modi for a tour of the couple of heritage sites as well as a roadshow. Remember, he's visiting the country as he is the Republic Day chief guest this year. Meantime, thousands of people led by Manoj Patil are set to enter the financial capital on Mumbai on Republic Day to express the long-pending demand. This is for the reservation of the Maratha community. In light of this march, a lot of the Mumbai-bound roads, especially the Navi Mumbai roads, will remain closed. There will be diversions, and the Bombay High Court has issued a notice as well to the Jarange Patil and put the onus on the government to ensure that day-to-day life will not be disrupted.
Okay, and as the celebrations and preparations are underway for the Republic Day and people are watching out for the parade tomorrow, there's going to be no immediate respite as far as the weather is concerned, especially in North India, because that continues to shiver under the cold wave. The IMD has forecasted persistent dense fog conditions in the northern part of the country over the next 4 days, and he has also predicted the possibility of light rain or snowfall in western Himalayan regions for the next 3 days. You also have news coming in from the world of sports, wherein boxing legend Mary Kom has announced her retirement from the sport. The 6-time world champion and Olympic medalist hanged her gloves because of the age limit now. The international boxing rules allow male and female boxers to fight in elite level only till the age of 40, and that's the reason she's hanged up her gloves for now.